Global stocks are kicking off the new year on a high note, and a familiar theme is driving those gains: artificial intelligence. It comes as big tech showed some extensive gains last year in 2025, thanks to AI chip manufacturing. For more on this, let's bring in CBS News contributor Javier E. He is also the business editor at the Dallas Morning News. Great to have you on, Javier, and Happy New Year. We've been talking about this a lot, right? AI having a big impact on the economy. So how is this country's involvement in AI development likely to impact the global market this coming year? And are those big investments actually sustainable?
Yeah, look, economic trends generate a lot of buzzwords, but artificial intelligence isn't some meaningless word salad. It's more than just a catchphrase. It's a very lucrative trade. It's the biggest macro trend driving markets and increasingly a way of life for everyone. Everything we do as a society is digital. So these publicly traded companies we talk about all the time, they're spending billions of dollars in this fight for the future. Is it sustainable? That's a really open question. But I do think that a lot of analysts are pointing to the fact that tech companies now are spending more and more on physical plants and data centers and things that involve real estate and creating energy. So that's a real question about how much more they can spend, and there's a lot of questions about whether or not it actually turns into a return on that investment. But AI in general is just kind of reshaping reality as we know it. It's touching on every aspect of modern life. It's why all these companies are shelling out all this money. And it's why every government on earth now has an industrial policy that's tailored specifically for AI. And as much as we talk about the impact on markets, it really is viewed as a matter of national security and a totem of industrial policy.
And Javier, you had mentioned real estate. So let's chat about that, because the Federal Reserve is now leaning towards cutting interest rates again this year. And home buyers are, of course, hoping the mortgage rates could follow suit. So what do you think we'll see in the housing market in 2026?
Yeah, so we close out 2025 with a little bit of good news. The Fed cutting rates is generally speaking helpful for first-time buyers that are desperate to get their first home. Mortgage rates have been prohibitively expensive, but they're inching lower. So they hit the lowest levels of the year, around north of 6%, which is still pretty high, certainly higher than most people that have mortgages. But it's an improvement. It's a modest incentive for buyers that have been kind of waiting for Godot when it comes to lower rates and cheaper home prices. And speaking of, the labor market stagnated, but home prices are finally coming off the boil. So that's expected to sort of continue in 2026. All told, we're starting the year with some fairly encouraging news and, maybe some movement for a lot of buyers that have been sitting on the sidelines for a very long time.
Okay, good to know. Javier David, thank you so much.